Guys, welcome to my channel. I trust you are all doing good. If you are new here, kindly like the video, subscribe and turn on notification for more video like this. So basically we've discussed a lot of things as regards combining MSNR with CRT. If you can just take a walk and go back to those previous videos you've done on how you can actually combine MSNR with CRT, you get to learn a lot of things, and these are actually in sequential order. That is, you watch one after you watch the other one. These are prerequisite actions that is, you have to follow the flow. Exactly, you also have to follow the flow. You have to start from the episode 1 to then you move upward. So today I'll be making a BTC trade recap here. How I caught some longs on BTC trades, how I framed the entries, how I framed the buyers, how I booked the directional buyers, how I framed the whole storyline from higher time frame. We talked actually that you use your higher time frame for your directional buyers and you use your lower time frame for your entries. So higher time frame in the sense that your higher time frame is all about the candlestick, is all about the CRT for your directional buyers, and you are using your MSNR levels for your entries. So let's proceed and let's cut the whole long story short, and let's proceed to the entries and to the trade. So now basically this is BTC USDT, right? So yeah, let's proceed. So I said you use your higher time frame for your directional buyers and you use your MSNR, your lower time frames for your entries, right? Your MSNR levels, right? So basically this is what we have on BTC USDT on a weekly time frame. So basically I use weeks exchange weeks for my data feed, because I feel they provide the best and the nice price action for crypto pairs generally. Yeah, so weeks, WZX rather. So basically what do we have on BTC on weekly time frame? So let's go on our line chart. I said you can actually use your line chart with markers, to see the exact key point, that V-shaped key level, your A-shaped key level, your open close key level. And your line chart markers won't show you your open close key level. Sorry, your ordinary line chart won't show you your open close key levels. Your line chart markers will also show you your open close key levels in your line chart. So these are line charts with markers, right? So what do we have left? We are having some kind of a range here, and this is the range I'm talking about here. So basically go back to your candlestick and you see, so we have this range low here, this one here, and a range starts with a strong low or a strong high, as the case may be. And we have this high here, we have this first high here, right? Then we have this last high here, right? So basically this makes more sense, right? So if you have to draw a gam box from that high to that low, this is actually an equilibrium level, and this is the discount level, right? So this is the discount level. What do I mean? So these are the discount level from that particular range, right? So basically we are trading in a very safe zone. So that's just the significance of drawing the diagram box, just to see if you are trading in a very safe zone. So what do you have here? If you could pay attention to your line chart with markers, you could see what I'm trying to explain here. You have a V-shaped key level here on a weekly scale. So let me increase the thickness of this particular trend line. So we have a V-shaped key level here on a weekly scale. So this is a V-shaped key level. You could see the significance of that line chart with markers. It makes your whole drawing and your whole mark out have a precise and a very clean one. That's just the significance of using the line chart with markers, right? So basically let's go back to the candlestick to see liquidity's entries. So what am I saying? So we have liquidity build up here. These are liquidity build up. We have this one here, basically this, and we have that as well. We have that strong high, we have this that high and the liquidity high as well. It's high, we have this high as well. It's like a CRT candle, right? So we are waiting if this week candle actually closed above this, so we could see some reduction and rejection. We can actually just look for more buys to the upside, right? But if this candle, this particular current weekly candle closed below it, then you look for more sales to the downside as well. So basically let's proceed. What's going on? So basically here you could see that we had this already. So we had our liquidity level here on a weekly scale, and we have this V-shaped key level, price rejecting from that V-shaped key level on a weekly scale. So this is like a weekly rejection. Let's look for a daily reaction and confirmation for that particular zone, right? So basically this is what we have here. Basically this is what we have here. So we have this V-shaped key level here. And why are we leveraging our V-shaped key level? Because it's actually a very strong level. Why? Because it swept previous liquidity level, like it swept the previous low and added multiple break of structure to the upside. We broke this high here, right? We broke that high there, and we broke this high as well, these major highs. So that's actually a very, very strong low here to talk about. So you could check them out on your line chart with markers to just see them very, very clear. You see, so we had that multiple break of structure and a shape of liquidity, making that particular V-shaped key level a very, very strong one. Yes, so basically we have a very strong one, and we have a liquidity very close to it. This is actually a liquidity. This is like an engineered liquidity very close to that particular weekly V-shaped key level. So now let's investigate these daily entries, these daily buyers and daily POI in alignment to that particular weekly A-shape, weekly markers that we had, right? So let's pay attention to this. They say direction is also important wherever you are moving. You can't just be moving with speed. What if you are moving with speed in the wrong direction? So let's pay attention to direction. We are actually framing our entries from a time frame for our directional buyers and your MSNR levels for your entries. So let's zoom out and see what the candle is talking about in the on the daily time frame level. So this is actually a very nice suggestion on time frame on candlestick, right? So we had this one and the second one here, and this is actually just from a weekly level because they are not really closing below it. Instead, they are closing above the level. So take a look at what we have here. So this is actually a V-shaped key level after that rejection. We have this first rejection on a weekly time frame here on a daily scale. So this is actually the first rejection that we had, and the second rejection is this V-shaped key level. So we've talked about this is like a KMR level. This first zone is like a KMR level for that V-shaped key level, right? We've talked about a lot of things as regards KMR level, as regards V-shaped key level, right? So go back to your candlestick and see this. So what do you have here? So this particular KMR level is supposed to all sponsor more buys to the upside. What do I mean? If you go back to your line chart to see, it's very, very clear. So here you expect this particular V-shaped level to sponsor more buys, this particular zone here to sponsor more buys to the upside, right? Instead, the price actually broke below it and form a KMR level, right? So that KMR level makes more sense in the sense that price trade trade to the downside and trade to the upside as well, right? So which makes more sense, right? So we have this high, this low rather here coming back here and mitigating this particular level, and we have this V-shaped key level as well. So this rejection on the daily time frame, let's investigate it on a H4 level. So we have this as well. Let's investigate this H4 level. If it's going to hold, if it's not giving us any sign of holding, then we come back to this V-shaped key level here. Do you understand it? Now let's delete that and let's work with this this first rejection. Let's investigate that particular zone if it's going to hold or not. So let's go to H4 and see what's going on here. So on H4 we have this. So on H4 we had this, right? On H4 we had this. On H4 what we had is very, very interesting. What we have is very, very interesting. What do we have? So we had this open close key level that sponsored multiple buys before it eventually broke to the upside. It sponsored a buy here like twice. It sponsored two buys to the upside, right? Then eventually got broken to the downside above, then to the downside again, and then sponsored this buy again here. So which makes more sense, right? So this daily key level is actually an open close key level on H4 level. Do you understand? So what do you have? So let's investigate this. This is where we are looking at. This particular zone is where we are looking at, right? So but mind you can actually just work your way around this, right? I'm coming. So take a look at this. This is that KMR level that we're looking at too. So this is a CRT candle on H4 that you could not really open your eyes to see, because subconsciously you might not really pay attention. To them, because mind you, these are actually this is actually CRT candle from this particular low here to this particular high, because why? They are actually candles of the same color. Pay attention to candles of the same color. Like this is actually a bearish candle, a bearish candle, a bearish candle, a bearish candle, a bearish candle. They are candles of the same color. The moment is a sweep happen in alignment with that particular rejection on that time frame, then you anticipate a CRT holding again, like a solid candle. So do you understand? So what do you have here? So after we had that rejection and we have a CRT candle forming already, so do we have any confirmation on H2 or H1 as regards that H4 rejection in price? So let's check it together. So basically here you go. So here you could see that we had this. So this is actually that's one on H4 on H2, right? So we could not really see anything clearly. So let's go to H1 or even 13 minutes. I think this, yeah, this network is kind of bad. But let's just wait for this to load. So this is what we have here. So this is that H4 level. This is that H4 CRT load that we are looking at to take. So let's go to 13 minutes to see the fractal structures, just to confirm that particular movement. So this is 13 minutes. So let's check 13 minutes out. It is 13 minutes. 13 minutes gives us something very, very nice. So we have that level here, sweeping that previous level one. We had this particular rejection in price. But we talked about something very, very significant, that if you are taking your entries, you have to take them in alignment with your criteria. So let's say this is actually a V-shaped key level on a higher time frame that we are looking at to take, right? So this is actually a V-shaped key level on a higher time frame that we are looking at to take, right? And we had this. So price trade very, very close to it like this. Price comes down and something like this. Price comes down and gives something like this, right? There is no liquidity, there is nothing. It's very, very risky for you to take your entry directly from here. It's a very risky one to take your entry because you're not assured it's going to just come down and start to use this level again for the downside. So you forcing your entry here is not really necessary. You have to wait for it until everything actually plays out the one you want. So what do I mean like this? So you have to wait for something like this. So what do I mean something like this? Like after a break of structure, you anticipate a pullback like a liquidity level, then an ABC pattern to move to the upside. So this is actually the best scenario for what you're looking for, or even a KMA level, as the case may be. This is best scenario. But if you're not seeing anything that looks like this, don't try to force it, because oh sorry, I think the network is very bad. But let me try to reload this. So basically, you could see that we had this here. We had this particular level here. After that double break of structure to the upside here, then we had this pullback like an inducement liquidity or engineer liquidity, as the case may be. Then we have this V-shaped key level here. That's the pullback that we're talking about, and this V-shaped key level to sponsor more buys to the upside, right? So basically, all of this actually have the works in alignment with logic here. Does not really just study the pattern, memorizing patterns all along. No, they actually work in alignment with logic, right? So what do we have? We've already used our CRT in alignment with the particular daily ejection to frame our entire bias. So take a look at what we have here. We only have a breakout here and not really a valid pullback to trade from. You just only have a breakout. So after that break of structure, what do you have? Here's our first pullback. So this is our first pullback after break of structure here. After this break here, we have this first pullback here. So do you understand? So wherever A-shaped level you are looking at is going to be below this particular pullback, whatever entries you want to look out for. So take a look at it. So unfortunately, markets come back here and sweep here. So after markets sweep this particular level and close above here again, so we are the same thing you're looking for here. The same thing you're looking for here, the same thing you'll be paying attention to here, as long as you're still rejecting from a daily key level, which is this. So it's just very, very simple. So same thing you're looking for in this particular scenario, the first rejection is going to be the same thing you're looking for in the second rejection as well. So just pay attention to all those price action. It's very, very easy and logical. So what do you have here? So you have, after that rejection or daily rejection, like a daily rejection, you have a break of structure here. After that break, you had a pullback here. So go back to the line chart, you could see them very, very clear. So we had a break of structure and we had a pullback. So this is actually a break of structure. Then you had a pullback in price here. Do you understand here? So that's actually a pullback that we had. So this is what we are looking for. That's what we are looking for. So we had this either sometimes I said they use your levels very close to your liquidity. So we have a KMA level that sponsor multiple buys, like the more rejection, the stronger the zone. You have a KMA level here. It's actually a KMA level very close to liquidity, and we have a A-shaped key level here. So wherever, even if you are buying, it's going to be below the wick of that particular setup here, something like this. Something like this. So this is actually the daily. This is actually the H4 CRT high that we're looking at to trade to, right? This one here. I think that's bad. The network is bad. Wait, just wait a bit. I don't know why. Is it network or why is this trading even lagging? I don't know. but I feel it's going to come back very soon back. So here it comes. So we have this yeah, exactly, it's like a 10-hour trade. Your SL is going to be up below this particular week. That's your SL. That's just your SL. Yeah, coming not white. Yeah, that's your SL is going to be below here. So make sense, right? Yeah. So take a look at what we have there. Just take a look at what we have there from that particular H4 level. You know, we marked out the directional bias from H4 just to see what we have there. Coming. So here you go. So this is actually on H4 level. Take a look at that. So this is actually the CRT CRT completion here. See, it's completed as CRT high. Then take a look at how it's formed from here to that particular exchange point. So there's another thing very interesting on 45 minutes that happened after the CRT actually got broken to the upside. And I told you something earlier that for you to know if there is going to be a reversal after the completion of a particular criteria we're looking for is how the candle actually close. If the candle close with a wick, then you anticipate a reversal. If the candle close the body, then you anticipate a continuation. It's just very, very simple like that. So what do we have here? Take a look at this. We had the CRT candle here, this particular candle, and the candle there. So I was expecting more buys on BTC after that particular combination on price here. So we had this candle low and this candle high. Take a look at how it just formed, just like a CRT candle. So you see them everywhere. But you know, they don't usually form, but when they form, they're actually a banger trades. Yeah, they don't usually form, but when they form, they're actually very, very nice banger trades. So this actually was just from this particular book close level that's sponsor multiple buys here. This one here. So that's CRT candle. So I told you guys that CRT candle works best in rejection. So take a look at this. So we have this low here, you have this low, see CRT low here, and the CRT high for that candle here. So see what happened here. Then we tap into this particular level for more continuation to the upside. Yeah, I saw this very, very late, but I was already completed the CRT criteria before I saw it. Yeah, so I'm coming. See what I'm trying to say? The SL is going to be below here. The SL is going to be below this week. Yeah, target is going to be this high. So it's like a 4-hour trade, 5-hour trade. Yeah, for BTC. So that's basically how I caught this particular, how I frame this old entry. Just basically this. So this is actually what the analogy looks like. You know, you have a V-shaped level that goes like this. On a time frame level, it's actually another time frame trade. So you have this is a time frame level. So this still boils down to our the first video that I made on combining CRT with MSNR. So take a look at it. So price trading very close to here using the CRT candle. Coming here. So then you anticipate like something like this. Yeah, just something like this on lower time frame for your entry. They are very, very, very logical, and you know you could have reason for those kind of trades. And I believe I've passed one or two information to you guys tonight, and I trust you all will go back to your chart and check them out. Yeah, because they are very, 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 very logical and very, very easy to explain. They are just how will I say, there is not something very, very technical that I just have to admit the way it is. There are explanations for every action here. Not that it's not something you just have to admit the way it is. No, there are explanations for every action, and which makes it more logical. Logical in the sense that, you know, if you have ABC, then you anticipate XYZ. If you have XYZ, you anticipate ABC, something like that. So you know what to do at each point in time, yeah, or each point in price. So basically, this is all I have for you guys today, and as regards the BTC trade recap. And I trust you've learned one or two things from this particular video. If you find this video insightful, helpful, or you find it useful in one way or the other, kindly just like the video, subscribe and turn on notification for more video like this. And you can just do well as well, just check the previous videos I've made rather, and you can just connect with me on WhatsApp, Telegram, and also on my X. Yeah, they're all in my channel link here, description here. So yeah, welcome to Herman's channel, and thanks for staying to the end of the video, and I'm looking forward to see you guys in the next video. Bye, stay safe and stay tuned. Bye.